Yes, so good day, ladies and gentlemen, once again. Today, as it was announced previously in the economic data release, we're going to discuss US PPI month-on-month data. And I would like to remind you that it is a leading indicator of consumer inflation. When producers charge more for goods and services, these higher costs are usually passed on to the consumer. And it measures change in the price of finished goods and the services sold by producers. So, as you can see, US PPI month-on-month data, as the forecast for December is 0.4%, and previous was minus 0.1% for the month of November. U.S. Producer Price Index for finished goods dropped 0.1% in November, down for the third consecutive month, while economists expected a flat reading. Energy prices led this decline for the second month in a row. Core prices excluding energy and food products increased 0.1%. Over the last 12 months, PPI declined 6 times, while the average gain was less than 0.1%, indicating weaker demand. So moving on further, it is possible to see economists surveyed on the matter from different banks and firms around the world on estimates for US PPI month-on-month. So taking into account this data, the median estimate is 0.4%, average estimate 0.4%, high of 0.8%, and low minus 0.1% on 79 surveys. So talking about the forecast further on, I would like to quote Michael Carey, America Chief Economist in Credit Agricole on the matter. We forecast a 0.5% increase in the December top-line PPI alongside a softer 0.1% increase in the core PPI. The energy index will likely rebound with the higher residential gasoline prices in December. Gasoline prices rose 1.4% between reference periods for the index, and this will be amplified by seasonal factors which anticipate declining gas prices in December. Food prices were unchanged in the PPI last month, and agricultural prices suggest they should continue to remain soft. So, and finally, to our fundamental aspects, as you can see, our traders on the community were 50-50 on both bullish and bearish aspects. So one of the bullish comments by Jez was that PMI in manufacturing has increased, meaning that purchasing managers had some work to do, and I would see it reflect on the overall production as well. I see it could meet the expectations no matter the recent bad news in sales and inventory data. Core PPI is a strong indicator since it is published ahead of CPI, giving an early view of the CPI, and it includes several important numbers from the perspective of the producers, including raw material prices and the cost of production itself. And one of our bearish comments by our one and only Sonia trader, PPI down 0.1% in November, the minor in 12 months. This decrease is due to the prices of final demand goods and services. I expect bearish impact US dollar, Japanese yen. And that was basically it on the fundamentals and from my side as well. So now I would like to give floor to Alex to cover up on the technical matter, right? Good.
Everyone, today, as you already know, we are discussing U.S. producer prices, and together with tomorrow's CPI date, I guess both these reports will have a significant impact on what we'll see and what will say the Federal Reserve later this month. And it seems that everyone has already stripped out the Friday's nightmare where labor report showed U.S. economies' inability to create jobs. And if I recall correctly, yesterday 2 of the FOMC members already expressed their very hawkish views. So I guess there is already a potential that this month the Federal Reserve can be very hawkish as well, and therefore the greenback can appreciate. So as we are discussing producer prices, and the consensus forecast goes for the 0.4%, so that will be stronger than expected data from the month earlier, and hence the currency pair euro and greenback can depreciate. And therefore our positive to price trading strategy will be based on euro USD currency pair. In this case, the potential trading strategy will be with the entrance point at the market price, which is currently just slightly above the important level of 136. To be more precise, that's 136.07. And in case we'll see some stronger than expected data, then the pair will depreciate, and therefore the potential take profit could be placed at 135.84. And that will be just 22 pips below the market price. And as to the stop loss, it can be placed at 136.36, which is 29 pips above the market price. And speaking about the technical levels, the take profit will be placed right at the level of weekly S1, while the potential stop loss can be placed at the level represented by weekly pivot. So, yeah, and taking into account that this week's volatility was just slightly less than 100 pips, then a move equals 22 or 23 pips seems probable on the base of US PPI data. So as always, speaking about the market sentiment, currently it's slightly bearish, with slightly more than 58% of open positions being short. Meanwhile, the single currencies sold in almost 58% of all cases, while the greenback is bought in 54% of all cases across the board. And as we assume that the pair will depreciate on the back of stronger than expected data, then it's worth paying attention to pending orders. And as you can see, in the 50 pips range, slight majority of pending orders are placed to buy the pair, while in the 100 pips range, 58% of orders are placed to sell the pair, meaning that in the nearest future the pair can depreciate. So, and pending orders are ready to provide some support for bearish movement. And when having a look at market sentiment provided by other market participants, as you can see, one of the traders are selling the pair in almost 65%, while Saxo Bank traders are opening long positions in 68%, and traders at Daily FX are also strongly bearish, with 66% of open positions being short. Yeah, and finally, as always, let's have a look at the table with aggregate technical indicators, and as we can see, the vast majority of them are sending sell signals, including indicators on the 10-minute, 30-minute, hourly, 4-hour, and even daily charts. So in the short, medium, and long-term perspective is bearish for the pair when being based on the technical indicators. And what is more important, I would like to stress out MACD indicator, which is sending sell signal, meaning that markets are overbought and will need a move to the downside. And as you can see, just during this year, the pair has been strongly bearish, and after opening around weekly R2 at 137.75, the pair has even dipped below weekly S1, which is represented by 2 days take profit at 135.84. And so far this year, the pair has been fluctuating in the range of 226 pips. So not very impressive, frankly speaking. Well, just 2 minutes before the news release, and I guess what else I can say is that, if I recall correctly, Euro USD was trading in boundaries of the, just a couple of minutes ago there was a channel down pattern on the Euro USD. However, currently our platform is showing a double bottom pattern, which is just 35 bars long, so not very reliable one. Yeah, but it's obvious that the pair is trading in a strong downtrend movement this year, and it has a further potential to depreciate when having a look at fundamental data. So just a couple of seconds left before the data, and currently the pair is depreciating and approaching 130 level, 136 level. So yeah, as you can see, monthly data came in line with analysts' forecast at 0.4%, and while the core PPI came at 0.3%, rising from last month's 0.1% gain. Yep, and the initial market reaction is 14 pips. Yep, so quite impressive. And the pair has penetrated the 4-hour support at 136 and is approaching our take profit, which is just 11 pips away. Yeah, and what's more important, that the pair has breached 136 level, and in case it will be able to close below it, then I guess there will be high possibility that the pair will decline even further and will reach our take profit, which is placed at 135.84, represented by weekly support, as I already said. So, yeah, to conclude, once again, technical indicators are sending sell signals, while market sentiment is bearish. Moreover, pending orders are also placed to sell the pair, and fundamentals are also speaking in favor of stronger dollar. Therefore, the outlook for Euro USD is bearish. So I guess that was all from my side. Hope that was useful for some of you, and thank you for attention. Giving the floor back to Polina.
Thank you very much, Alex. And as we can see on the usually data, not a big shocker from the US PPI month-on-month side. So, Dr. Dow, any comments on the matter? Yeah, Dr. Dow apparently was shocked by the data. I don't know what exactly figure did he expect, but apparently his...
There you go. Now you can hear me.
Oh.
Sorry about that. Turn my mic on. Yeah, the real surprise is I'm talking here and the mic is not going up and down. The real surprise about the internals, because it's a lot hotter even compared to the numbers themselves. We were looking for a hot PPI and inflation kick, but now we're getting even more internals. We're seeing they're breaking it down now, trying to figure out why the strength is there. But one thing I can say is that gold is not moving an inch from it. Matter of fact, it's actually lost $1 since the numbers came out. So they're looking at the Empire numbers, and it's falling back to May of last year. That was a pretty big move from 2% last month to 12%, and so the numbers. I guess if anything, they're starting to look at some of these. The numbers are starting to kick up inflationarily, but they seem to keep a lid on it. I mean, I was staring at the gold when the number came out, and I saw that it was 0.03 versus last month's 0.1, and then the core rate was even higher. And when I saw the core rate higher, I was expecting to see like a big green, move in the gold. Gold didn't budge from it. Gold's now down $2 from the news coming out. So, ex food and energy. I don't know what they think they're measuring it on, but it always goes with X. They exclude the cost of food and the cost of energy. So I don't know. It's an odd number there. I do have an example. I guess I have two examples after I get my webinar going again on the Baltic Dry Index, what we call dry goods being transported and the way it's dropping, and it plays into this. That it plays into the Empire numbers, and then it plays into the inflation numbers. So All numbers are confusing anymore. I had a friend call last night and say to me, "You understand this stuff," and he's considered one of the legends on Wall Street. He says, "Why is the number so upside down anymore?" And I said, "Well, the central banks are plowing money in, so it really distorts the numbers." And that's all I can really say about it. It's sad but true. We have to chase these numbers, though. We don't have much of a choice. We have to watch them. We have to pay attention to them. So, thank you, Gita, and thank you, Paulina, and thank you, Alex, for having me with you.